Okay, we're back. We are talking about net lease investing. Today's topic is pricing. It's what everybody wants to talk about. Both the buyers, both the sellers. Everybody wants to know what this thing is going to sell for. There's a lot of variables that are involved in pricing. Real commonly, it is referred to as a cap rate. And people, they determine the price on these based on a cap rate. What is a cap rate? Cap rate is a ratio between the price of the property and the income on the property, expressed as N.O.I, or net operating income. What that is how much rent you get divided by the purchase price gives you a percentage. And it's a pretty broad range. In net lease investing, we're talking about on the low end in the 4s. On the high end, it could go into the double digits above 10 or 11. A lot of variables here. Generally speaking, the less the cap rate, the lower the number, the more expensive it is, the safer it is. The higher the number, the more cash flow you get, but you're also buying risk. What we want to look at is what makes up those cap rates. For instance, you've got a creditworthy tenant. And that creditworthy tenant is going to go for a premium. We're talking about like McDonald's here, or a Bank of America, Wells Fargo. These kind of properties, they're going to be trading in the 4 cap range. And what does that mean? You're paying a lot for the property, but you're getting a very creditworthy tenant that is not likely to be going anywhere. So you know you're going to get paid rent for the term of that lease. Don't have to worry about that. Other tenants that have a higher cap rate, if you're in the 12s, or anything over 10 for that matter, that tenant's leaving. You're going to get rent for the rest of that term of that lease. It might be 2 or 3 years. It's definitely under 5. If you've got a year left on the lease and you've got a 12 or 13 cap, you better be figuring out what you're going to do with that property. Real simple way to think about this is think of a 3-legged stool. You take one of those legs away, the stool tips over. What are the 3 legs? You've got the real estate. That's one leg. What you're going to want to look at for that leg is, what is that property going to be? And what is this property? I'll come back to this in a minute. The second leg of that stool is the credit worthiness of the tenant. The third leg is the lease terms itself. So back to number 1. What is that property going to be? When you show up and you look at this McDonald's and you look at it and say, okay, if McDonald's were to ever leave, what am I going to put in there? Well, this is real simple. Everybody's going to want to take McDonald's place, which is probably why they're not going to leave. If it's a bank, there's a lot of online banking today. There's branches are getting smaller. Branches are going into grocery stores. Are big bank branches going to be around forever? Who knows? But the good thing about bank branches are they're on good corners. That's good real estate. So that is the one leg of the stool, is good real estate. The lease terms itself. These are important. You get into the lease terms and you find out that the guarantees don't have any teeth in them. Who are you going to go after? Or you look into the terms of the lease and you find out that the person that signed the lease is a shell corporation and it's really not the Fortune 500 company you thought that it was. The third leg is the credit worthiness of the tenant. These are all things that you want to consider. They're all really important. If you're missing one, and it's amazing real estate, if you've got a corner of Beverly Hills on Rodeo Drive in Wilshire, you don't care if it's got a bad credit tenant in there, because if they ever left, you've got amazing real estate. Plenty of cities around the country where this also exists, but the reality is if somebody's on that corner of that perfect corner, they're also going to be a very, very good tenant, because that's what it's going to take to pay the rent. It's kind of a big topic. Everybody wants to talk about it, but cap rates are something that gets debated a lot. I'm not going to be able to definitively tell you what the cap rates are for a particular tenant, particular location, and it also depends on where we are in the economic cycles. They all change. A half a point spread will make a big difference on the value of a property. These are things that we're going to talk about a lot. But in the meantime, if you want more information, go to my website, Beaubien.com. That's www.beaubien.com. Have a great day.